Hi, welcome back. It gives me great pleasure to introduce the next session, a presentation from the BCCS cluster in Lithuania. Lithuania is another hub where innovation is thriving, and much like Israel, punches above its weight. But I'll let these guys tell you about that. So without further ado, I'm going to introduce them onto the stage. I will, Andrea, one of the Andreases, I'll get up there. So thank you very much. Enjoy and look forward to hearing all about it.
Thank you, Johnny, and good afternoon, everyone tuning into the third day of FinTech Week Tel Aviv, and welcome to the panel discussion, The Future of Finance. I am Andrius Petkevičius, the Managing Director at BCCS Cluster and also the moderator of this panel. BCCS Cluster is a consortium of private and public sector organizations that supports the growth and development of the FinTech industry. So let me start by saying that I am thrilled to have such a fantastic panel here with us today, and let's give a warm welcome to them. So please meet Andrius Bartminas, the CEO of SuperHow. Hello, Andrius.
Hi, everyone. Nice to be here, actually.
Hello, Liudas.
Hi, everyone. Yeah, nice to be as well.
And also Martynas Biliūnas.
Good day for all participants. Hello.
Thank you, guys. Nice to have you here. So with the advancement of technology and the rapidly changing financial markets, the demands of the regulators have changed and developed over the years. Join us as we will be embarking on a discussion about the next generation of finance. Our panelists will share their views on the evolving future in terms of everything that is happening, what will happen, share their insights together with the best practices and experience. Do use the opportunity to share your questions that you may have about the FinTech industry, and we'll try to weave your questions into the conversation as we go along today. Before we proceed forward, I'd actually like to give a moment to our panelists to give a short introduction about themselves and the companies that they represent. Liudas, could we start off with you?
Yeah, sure. Hi. So it will be a pleasure to start this. So I'm the CEO and the founder of Ondato. At Ondato, we are helping the financial institutions to basically benefit from the compliance, and we are focused on the know your customer process, from the customer onboarding, data validation, data gathering and monitoring, and the due diligence, ongoing due diligence, enhanced due diligence, and all the other procedures that relates with the know your customer. So I will be happy to talk about the identity management, about the future of identity, about the identification solutions, and of course about the KYC itself for sure. So it will be a pleasure to talk to you guys.
Thank you, Liudas. Martynas. I think that we cannot hear you for some reason.
Thanks, some technical issues, but now you should hear me well. So I'm Martynas Biliūnas, managing partner of Privacy Partners. Our main business is data protection officers, innovative privacy protection programs for companies. So in general, we're working in a field which is called GRC, governance, risk management, and compliance. From my previous experience, 16 years in Microsoft Corporation, so compliance is, let's say, in my team's backbone. And hopefully today we'll be able to find some innovative ideas how to ensure the privacy in FinTech solutions. Thanks.
Perfect. Thank you, Martynas. Andrius.
Hi, everyone. I am Andrius Bartminas. I'm CEO and co-founder of SuperHow, a private blockchain research and development lab based in Lithuania. So we work basically with innovation on the edge, actually, and using the blockchain, artificial intelligence, improving the business processes and business opportunities as well. We work on various cases on, for example, with central banks, on central bank digital currencies, with financial market participants integrating blockchain solutions and distributed digital identity solutions into their infrastructures. So my topics is innovation and basically everything that is happening in the FinTech industry currently, this transformation and improvement through innovation. Yeah.
Thank you so much, guys. So let's begin the panel discussion today, and I'd like to start off with a open question to you all. How do you see what will happen with the future of finance? What are the trends, innovations, and general direction that the fintech industry is moving towards? Maybe we could start off, Andres, with you.
Yeah, so okay, we see this digital transformation happening. So we had the digital economy prior, and it is booming now. Actually, everything is digital. We have digital signatures, digital identities, social networks, and everything. We can buy food, buy I don't know, flight tickets, everything on internet. And the internet is actually currently the backbone of any life, and especially financial life, actually. So we have the digital banks. We have already some banks that doesn't have a back office and is fully internet powered, and digital banks, or challenger banks, so-called. And we have now also this, systematic decentralization that is happening. And this digital economy is also transforming in something that is decentralized, and especially the blockchain as a technology and the crypto economy as such is actually trying to tap into that unknown or improved world that we will have. And yes, of course, as always, for example, financial industry is highly regulated. Some even tells that it's over-regulated in some parts, especially identity, KYC, anti-money laundering things. And we have lots of interesting things happening, from distributed finances. Central banks are tapping into these central bank digital currencies as next generation digital cash. And we have lots of innovative projects that are, I would say, in a gray zone, trying to mimic what is happening in the classical financial industry and improving with the decentralized protocols and making it peer-to-peer and more robust and effective ways of interacting in the financial world. So we have this uncertainty, and we have the regulators catching up with innovation as always, because regulation is always, stepping one step behind of what is happening in the market. So I think that where the future is and where the market is going, so it is going to full decentralization, peer-to-peer, pure peer-to-peer interactions, this semantic web, Web 3.0, and everything that lots of actually analysts and evangelists actually is writing about. So it is happening slowly, but it is. And I think that in 5 or less years, we will see a lot of improvement and changes in the fintech industry, especially because now we are hearing already from the central banks about, that we have also to understand more and maybe change our still very pessimistic opinion about the crypto market, about the blockchain based cryptocurrencies and everything. And because everything is happening, and some improvements are I think good to the market and could be implemented into the regulated environment as well. So that's my short overview.
Thank you, Andres, for the insights. Martynas, what are your thoughts in terms of the maybe challenges related to privacy? How does the future look like?
Okay, I don't want to be a spoiler of a fintech party today, but from my side, I will try to raise some issues which are now on the table of a privacy scientist. So the main issue for privacy is that as soon as you separate information from personal data, and put it on the web or any decentralized systems, that person cannot control this information anymore. And that is a huge concern of all privacy scientists and regulators. So currently there are some of the conflicts. I mean, it's more ideological conflicts which will be resolved in future, and some of them we already have some ideas of resolution. The key issues are that Firstly, AML requires very deep insight into the customer, even who is the customers of some customer, so to say a secondary order AML. So that's one issue, because all the privacy legislation in all the countries says that you should limit the personal data use to the minimum. And this is directly contradicts with AML legislations. So that's one conflict. Another one very interesting and innovative conflict, disruptive conflict, is artificial intelligence. Because all the privacy legislation says that if you, for example, do not give a credit for some physical person, you should be able to explain the steps, how this automated decision was done. And artificial intelligence systems, so to say, machine learning systems, in some cases, the algorithms cannot explain why specific decision was done. So this area is currently not fully resolved. Data protection authorities across the Europe and world, they are trying to build some guidelines, white papers, but this is at a very early stage. Third issue, which is very interesting, is a blockchain, and I think Andrus may give a bit broader insights into it, because blockchain formally is immutable. So to say, if you put something on blockchain, that's forever. You cannot change it anymore. With personal data, there is a famous rule, so to say, right to be forgotten, or rule of possibility to erase the data. So blockchain is applicable and very powerful tool to secure the personal data, but it should be applied very wisely, and it's not a simple process. Last but not the least issue, it's a data residency question. All of the countries, for example, if you take legislation of Europe, data should sit in the European Union. If you take legislation of US, CCPA, for example, data should sit in US. If you take the Russian legislation, Федеральный закон о защите персональных данных, they say that primary database of Russian citizens should be in Russia. With Belarus, the same story. So currently, data residency issue, it also contradicts a lot with all the FinTech technologies, which says that data is global, it's decentralized, and it should be managed by decentralized systems. So these are the hot topic from a privacy side. But again, I don't want to overrun the financial questions into this discussion. So we'll be happy to answer all the questions or participate in discussion later.
Thank you, Martinas. And I think that you touched upon a good point in relation to artificial intelligence and also KYC and AML, which is used quite heavily in the FinTech sector. So maybe, Liudas, based on your experience, could you possibly share what are the potential challenges and risks of using AI in KYC and anti-money laundering?
Yeah, so we really kicked off with a good insights and conversation. Yeah, so and that's maybe to note. Yeah, so in general, like everything is moving to like direction on moving on the full automation, and then no code solutions and all the stuff, and like implementing as fast as possible. And that's what Andrus also mentioned, and the finance itself is moving to like self-sustainable, let's say, solutions that could serve itself, and on its own. Yeah, so that's where we see everything is like moving. Yeah, so that and it even doesn't matter on the technology side, kind of what kind of technologies will be used. Either it will be blockchain, distributed ledger, whatever, but it's still the need itself. Is that to put as less human power as possible into any kind of solutions. Yeah, so and that's what we see where it's moving. And then we come to another part, so that what kind of solutions in this case. Yeah, so then the artificial intelligence and all related, let's say, stuff. And for us to understand now, especially when we have this kind of situation with COVID and everything, and when everyone was just forced to move all their services online, and of course it even not touches only the financial sector, but the financial sector very deeply, because of every company has to know what kind of clients they're dealing with, and not only because of the regulation, but also with the business risk and all the stuff, because the financial business is about managing the risk. Yeah. And basically, if you are lending, let's say, someone money, or if you have even the peer-to-peer lending platform, you still have to manage that risk because of the fraud rate and all the related stuff will be your profitability and everything. Yeah. So that's the core of the business, and knowing the customer and kind of understanding where the customer is from, what kind of activity to expect from that customer, and basically to be sure that this is the person that is pretending to be that person is the core of the business. And then the issues with the privacy sector and with the data privacy are conflicting anyway, because there are lots of these solutions now that could be used, potentially could be used, and kind of to secure the provider of the service. But on the other hand, they cannot be applicable just because of the regulation, and that's now kind of the biggest, let's say, conflict of that part. And another thing is with the AI usage and with all the rest of the solutions, because Martinas noted really well about so then the responsibility of those solutions basically, and then who has the responsibility on that end, because with current transaction volumes and everything, it would be just impossible to serve those transactions. I mean, even from the kind of how many customers are onboarding the financial institutions and all this stuff, and also with the transactions that those customers are making. And that's where now the artificial intelligence is used everywhere. Yeah, so like to either to have some alerts, either to have some let's say notes for reviewing and all this stuff. But if everything is fine, basically the engine is making the decision. It's just more the kind of approval of the person sometimes, and that's it, but without any kind of considering or understanding, let's say, the basic info. And that's the major conflict in general, because the responsibility for the activity sits on the, if talking about the financial institution, it sits on the CEO and the head of compliance, because they are kind of setting the rules, they are, following the regulation and all the stuff. And that's where, in general, they do not make any decisions. They are just kind of setting up some rules to follow and some kind of risk appetite that they're following. But like at the very end, some artificial intelligence engine is actually making the decisions. And as Martina said, it's just even sometimes impossible how it was made, because it's just made from accumulated data, and that's it. So that's a really interesting topic, where the regulation will move in terms of these kind of solutions, because otherwise now everyone understands that it's just impossible to control that by any other way.
Yeah, actually, I maybe would like to catch up with that, actually, what Liudas said. And actually, so this responsibility, and actually that's how this market is working currently. So there is a company who is responsible and who is liable for some procedures and everything. At the end of the day, the physical person is liable. And what actually this crypto economy is trying to change, and there is some term actually with which the blockchain movement was started, this decentralized autonomous organization, where you don't have actually this company as such, and you're putting this trust and responsibility on the protocol itself as a code. So that's how today's actually the decentralized finances is working. So you're putting everything into the code, and this is something that is, in my opinion, this new way of putting the trust and responsibility not on some company or some intermediary, but rather on the technology, will actually, at some point, it will be the game changer, I think, and legislators will understand that this is one of the ways that could be risks mitigated. Of course, what Martinas also said about this data privacy and the problem also with anti-money laundering, that you have to know that person and person's person, like client's client, that is also an issue, and especially in the digital world where you can have different identities yourself. You have the Facebook, you have like Google account, and all those identities are disconnected, and only what connects those is you as a physical person, and as a digital person you are dispersed yourself. So that's actually what decentralized digital identities and self-sovereign identities is aiming to solve, to connect these identities, these digital identities, into one single self-sovereign identity that could be self-sustained and enriched and improved as such. So that's quite interesting things that is happening to solve all those problems. But of course, as also Luda said, legislators are a little bit behind with it, because you have to know where it goes, and legislation is taking a time. And with a GDPR, for example, when it was issued, it was already like old, according to what is happening on the digital world. So lots of things doesn't match with innovation, actually.
Thank you, Andrus. I think you touched upon a good point regarding decentralized finance. So if I understand correctly, currently a lot of those innovative decentralized finance products are not regulated. Do you think that that traditional financial institutions could potentially, let's say, merge together with those DeFi products and possibly offer it as a separate service to those to their own customers?
Yeah, I think it's untouched and gray zone still, because what DeFi is aiming for is to be unregulated. Because first of all, what is behind the DeFi? There are actually a couple of or several principles. So first of all, the code and the protocol has to be fully open source. It has to be fully decentralized. So it means that there is no operator, or I don't know, the company who is running this protocol as a business, for example. And that's a different, I think, a different perspective and different strategy that currently the FinTech is aiming for. So they're streaming, like they're actually aiming for servicing the users. But DeFi is all about creating the protocol, and protocol is as a service itself. And from the DeFi market, of course, there are some components that currently is in very shady or gray zone from the regulator's perspective. So, for example, the stable coins that are pegged to the fiat currencies. So it is one of those who has the same properties as electronic money, but on different infrastructure, so on the blockchain. So from the regulatory perspective, it should be regulated under the at least electronic money regulations, and should fit all the requirements for anti-money laundering, know your customer, and everything. But I think this is just the beginning, and I think that the regulators and legislators understand quite firmly that issue and that problem, and at some point it will be regulated, at least this part of DeFi market. So and the others is still the DeFi market is there are some new improvements that are exotic to the financial market, but basically all the instruments that are in DeFi market are taken from the classical financial market. For example, the options, the swaps, the reverse repossession agreements, and everything that are used and is currently used by investors in the financial markets, for example. But what the DeFi is doing, they're creating this peer-to-peer and creating this protocol and human interaction, and you're putting the trust not on some institution or some institutional player or some licensed market participant, but rather on the code. And code executes and performs what it is written about. So it's different perspective.
And to add to this, Andrews touched a really good point. So basically, as in all the other markets, in the financial market, it is happening the same. That basically everyone is trying to get rid of the intermediaries as such, and that's where all the tests are running around. So basically, just taking one or other business case and trying to solve that with getting rid of the intermediary, because that's where everyone is trying to basically take their stack and basically just to make money from it, or to make the business case itself. So that's where everything is moving, and that's, I think, what we should have in mind, because it's all related with some types of transactions, with especially what DeFi is now about. Yeah, so like it's not, to be honest, it's not for end users that was built now. It's more for the institutions itself. It's the same with the self-sovereign identity example. Yeah, so it is in that case it will be, of course, for the users, but again, like trying to get rid of the intermediaries and then trying to secure those things. But there are some initial and core questions, basically, and some even not the functional or some kind of privacy related or something, but initially, if we as people or finance as money, they have to be located somewhere or no, and do we have to have some kind of jurisdiction or no? And that's some initial questions that I believe that needs to be solved in the nearest future, because today's technology is moving in that direction, that we wouldn't be having actually like some kind of place of living, or our money wouldn't have some jurisdiction as well. So that's some core questions that will be actually on the table to solve for the future.
Thank you guys for this. Also, I think that Andreas just touched upon a good point previously regarding fully digital banks. In your opinion, do we have such banks which would not have any back office, or if we do not, what would be the, let's say, innovations or challenges that we need to solve to actually create such sort of a fully digital bank? Maybe Andreas, you could chip in here.
I will start with that. Actually, yeah, I think theoretically and speaking from the perspective of innovation, yeah, it is actually possible to have the fully like back office less. How to say, the functioning bank. And what commercial banks is doing now, they're also, for example, in Lithuania, we have lots of banks that are actually transforming their business and making more, cashless, for example, interactions. You cannot like work with cash in the bank office. There are also improving the services and improving the QIC and all the procedures. But I think what now the most struggle and the most like human interaction required, and still time-consuming thing, and then for the banks is this compliance, because currently privacy compliance, or I don't know, for example, anti-money laundering compliance should be supervised by the person, and someone has to be liable. So still this part is unsolved, and you have to have the physical office and the person responsible for that. So as Liudas also mentioned, I will give him this like Liudas, maybe you, yeah.
Yeah, but that's a really good point, and basically that's the thing, yeah. So that technically you can launch a fully digital bank, yeah. So because there are solutions out there, and basically to integrate all those together, and basically to if even to supervise by the person, basically, but you can do that from whatever place you want, yeah. So because technically it's all fine. The biggest issue is that physically, you have to have the jurisdiction and the place where you physically can be found. Yeah, so and that's what the regulator is asking you. So like, okay, where do you sit physically? Where is your location? Where are your compliance people? what kind of people are these, and kind of who is the CEO, and you have to have the physical location, and that's basically under, let's say, that's the biggest conflict with the fully digital than bank and kind of having back office. So as Andrew said, currently there's a possibility to have less back office bank, but that still will be with a physical place, with a physical back office, of course with the supervisors and all the stuff, but it will be more digital, but not the fully digital as we would understand that fully digital.
Thank you, Liudas. Martynas, what's your take maybe on the potential privacy or compliance challenges?
Well, I listened to Liudas and Andrius' insights and took two very important points. As Andrius mentioned, the very important concept in the fintech space is protocols. It's not only in fintech, it's everywhere. Protocols and code. And generally, the protocols is a very, very good opportunity to introduce some, let's say, new privacy approaches. For example, currently, when we look into the privacy expectations, it's very subjective. Imagine what will be privacy expectations of some rock star. It's zero privacy life, and what would be privacy expectations of cybersecurity specialists? Completely different worlds. And fintechs in that space, they can serve as a privacy guardians for their customers because they have protocols, they have a very, very clear set of rules how privacy is managed and how privacy is approached. And another interesting point mentioned by Liudas is disintermediation, removal of all intermediaries. Because in reality, currently there is a huge disbalance. If I give my data to Facebook, Facebook has all my data, Facebook knows more about me than I myself, I get generally more or less almost nothing. I got a social network, I got communication, but that's it. Nothing in material. With changes in the whole concept, I manage my own personal data cloud. I do allow some fintechs, some social networks, some state institutions access this personal data cloud. So it's no intermediary. I'm becoming my own regulator in some sense. Of course, not all the states love it. Legislation currently is completely not compatible with such approaches where I'm becoming my own regulator. But for sure, the future is in the solutions where you have your personal data cloud, where you have your financial cloud, and let's say the only remaining thing is you physically, let's say, because currently it's no possibility to put the people in the cloud. Otherwise, everything else can be put in the cloud. So thanks.
Yeah, maybe also to complement on that, I think it works because now the financial technologies and internet is actually global. So there is no exclusive something. Everything is global, and you can have the different services that you can interact all over the globe. So and I think that the issue is that regulation is still, local and not the global regulation. We don't have, this synchronized or unified rules of how you have to engage. Of course, we have some anti-money laundering task force who are working on some protocols, I would say, documented protocols, how to improve, but it works in crypto world, for example, self-regulation. So a lot of things, because of it is not regulated, so the community is self-regulating still. And there is a market that also it self-regulates and works in this manner that, yes, there is the bad guys who are trying to steal, who are trying to fraud and everything, but new rules and how to interact and how to interact with this crypto economy, for example, are emerging every day. So we had ICOs, we have the IAOs, and we have lots of things that are evolving during the time without regulation, and it evolves due to the self-regulation and ecosystem driven approach. And the same protocols are actually as a self-regulatory tools on the technology level. So you're putting something onto the code, and that code works in that manner that it is described. So you're like putting this regulation into the code, and that's interesting also approach from some innovative projects that are currently available already. So it is interesting how it will evolve during the time, and how the regulators who are trying to catch up will actually take this, and how they improve something in their agenda.
Thank you very much, guys. I see that we're closing to the last minutes of our discussion today. So overall, I'd like to ask you maybe to share with you how our listeners could find out more about what each of you guys are doing. Liudas.
So yeah, so to find out of what we are doing, so it's really easy, you know, just just to visit the website and to read it over. But in general, you know, we're actually diving deep into this topic, and at least from the perspective again on the KYC, what we are doing is that to be possible to build a fully digital bank, you know, and just setting up the rules, as you know, as also Andres mentioned, really good. So it's about now setting up the rules in some kind of protocols, and to be sure that they will be followed. Yeah. So and then everyone would be sure about the procedures that they are following, and what kind of processes they have to enable. So, and that's where we are also moving, and that's where we are working on to have that, at least from the perspective of the compliance and from the perspective of know your customer. And yeah, so that's the direction that we are moving also, and that's what we see where all the market and sector is moving forward.
Thank you very much, Liudas. Andres, where could the listeners find out more about what you do? Maybe a few closing remarks.
Yeah, so basically you can follow us on LinkedIn. We have a page there, and you can also find us on the web. So we have a website, superhow.io, that you can visit and find those links on a different social platforms that we post our news. So yeah, and then being this technology company, we're like, our goal is to be at the front and on the edge of raising innovations, and that's what we do. Sometimes we're too modest, you know, as Lithuanians, we are so not so much about our big things that we do. So we as a company issued first in the world, central bank issued digital collector's coin on the blockchain. And yeah, we participated in several projects and built several infrastructures for central bank digital currencies already that are fully compliant and working. And yes, we do lots of interesting projects as well. And sometimes we have a lot to tell, you know, so please approach us on our profiles, and we are free to, you know, to communicate, and with a pleasure we'll tell you more what we're doing.
Thank you, Andres. And Martinas, how about you?
Of course, you can find us on LinkedIn and on web, privacypartners.lt. And our key question, key task every day is to use privacy as a value differentiator, as a trust generator for fintechs, not as an additional regulatory hurdle. That's it about us.
So thank you very much, gentlemen, for the productive panel discussion today. And I wish you guys a pleasant day ahead.
Thank you.
Thank you. I just want to thank you all for taking part and for sharing your obvious big knowledge and insights with us. And for Andreas for doing a sterling job moderating. I think one of you said that you're too modest, but it's a good thing. But because you let the innovation do the talking, and from what I've been looking at the BCC website, you're doing a lot of amazing stuff. And as I said earlier, like much like Israel, it's an incredible ecosystem, so much activity going on, and you punch above the weight. So there's lots of synergies between Israel and Lithuania, and long may that continue. So thank you, guys. If the audience can please show their appreciation and